All right, guys, we are now live. Welcome to the TRIL live stream. This will be an overview of one of my main models that you guys see me use. We talk about this a lot. And if you're outside the Juicy Trades community, if you guys are here is using this terminology a lot, this is your way of picking up on what we're putting down. I would love to have you as a part of our community, especially our free community, but we're getting more into that here in just a little bit. Got some housekeeping to get out the way. We're coming off the back of a very strong month here in November. Looking to keep this momentum going into December and end this year of 2024 strong as we approach the new 2025 year. Hold up, I'm just readjusting my shock mount. Yeah, so disclaimer. If you guys, long story short, I'm gonna just shorten this disclaimer. You can copy and paste and pause it and read it, but trading's risky. If you don't like risk, you're not to leave. If you like risk, you've come to the right place. Now, before we get into everything that we have to go over today, there's some housekeeping things that we're doing. Today will be our last day of Black Friday. With that being said, we have two different ways for you to join. Our bronze membership, which is your month to month, is now cut in half for your first 3 months when you hit the link in the description and use code Juicy500 or email juicytrades@gmail.com. And last but not least, highly demanded, highly requested, our gold is back. We actually cut the price down. As displayed on the screen, you actually get mentorship and lifetime access. But the only way to get access to that is if you email the email on screen, which is juicytrades@gmail.com. Okay. A little bit more housekeeping. Here's our posted schedule for this week. And I'm not sure. I already know somebody's going to be like, yo, you're going to put this on YouTube. I don't know if I'm going to put this on YouTube. This probably will. It might stay private. We'll see what happens. We'll see how Twitter likes it. We'll see if Twitter gives me the retweets and maybe we'll put it up. Now, calendar for this week. And what I want everybody to start getting culture of doing is just on Sunday, check the chat room. More importantly, check the announcements. Okay. And in the announcements, I'm going to post a calendar like this. And this is where you can find me. Where can we find X? What is X doing this week? Here it is. All right. We're going to have 2 live trading spaces. That third space here on Wednesday at 2:30 to 4 p.m. This will obviously be recorded, but if you can show up, this is going to be very, very important. I've also been booked for Thursday and Friday for some PM spaces too as well. I'll give you a more updated copy when I get more of an alert from the people that want me on there when I get more details about it. I should have all the details tomorrow. If you're gold, we're live tomorrow, Tuesday at 9 p.m. for in-depth mentorship. So be sure to mark your calendars accordingly. So done with the housekeeping. X, why am I here? Let's go ahead and get into it. The agenda for today is cover of the framework of TRIL. We're going to go over some trade examples, and then we're going to break down Friday's trade. And yes, I said Friday, Black Friday. I was there, and we absolutely murdered the market. And if you was a part of that trade with me here on Friday, great work to you. If not, here's the breakdown coming up. So the most common question in my inbox right now, right? If I was to pull up my Twitter DM, I ain't gonna put up nobody in blast. But yo, what's TRIL, bro? Bro, talk to me about this TRIL thing. What y'all over there trading in that room talking about that TRIL stuff? All right. So TRIL, for me, it's the framework. It's not the actual model. It's the framework, the checklist for what I call an A+ trade. Now, the difference between a professional trader and a gambler will always trade his emotions, always fall victim to his emotional state. A professional trader has a checklist of things. Why a checklist of things? A checklist of items that happen on the chart to give him the best and highest probability condition of winning. All right. That's what we want to trade as professionals. The highest probability conditions to give us the highest win rate. So for me, a 4-step checklist, TRIL, it's going to stand for time, raid, inversion, liquidity. All right. So what's the actual framework versus time? Right. Sorry. Time and price, it's a thing. I know there's a lot of debate on Twitter, a lot of back and forth on Twitter, but time and price is a thing. You cannot say time and price are not a thing if you reference to time at all in your trading. So that means if you come to trade the 9:30 open and you're usually done by 11 a.m., time and price for you are a thing. If you're waiting to 10 o'clock to trade for whatever reason, time and price for you is a thing. If you're leaving and coming back at certain times, time and price is a thing. So if you are indirectly using time, you're acknowledging time. So why not jump all aboard the time concepts. My question to you. So for me, when using TRIL, we like to focus number one on the AM kill zones with 9:30 to 12:10. And I know a lot of these concepts too derive from ICT. So I want to just go ahead and stop and give credit to where it's due. As professional traders and as traders, we all learn from different places and then we blend what we learn and make our own thing. This is my version of me blending what I've learned, which was basically supply and demand concepts and ICT concepts, which I combined it to make me a consistently profitable trader, and which I am giving and showing to you now. So going back, we focus on the AM kill zone, 9:30, 12:10. I know ICT has different timings, but this is how I do it. And then we have the PM kill zone of 1:30 and 4:10. Okay. We want to focus our trades, and when we're getting in, what we call macros. You hear us talking about this in the chat room. If you're a gold member, you have access to everything, everything that I'm going to cover. Again, I have a lot of, over the Black Friday sales, we had a lot of new members join us here. So I have some of the new members in here watching. If you were to go to where it says Gold Premium Elite and go into mentorship videos, this is what I call the Undisputed Trader course. It's over 20 hours of material that's designed to get you started from not knowing anything about trading to fully understanding the concepts and ready to execute. Okay. Everything that we're going to go over, macros and stuff, is in depth detail in this lesson. So if I say anything, for all you new Go guys and gals, got a couple gals with us now. If I say anything that goes over your head, you know where to go now. Okay. But macros or windows in time, time-based intervals or periods during the trading sessions that align with predictable behaviors. Okay. So macros, believe it or not, they have certain functions that I'm looking for. Okay. So that 50 to 10 macro, again, let me just give you an example. 950, 1010, 1050, 1110, right? 1150, 1210, right? 50 to 10. When you refer to 50 to 10, we're talking about the last 50 and the first 10, basically the last 20 minutes of every hour. Okay. That's the continuation reversal macro. If the macro 20 to 40 prior to that 50 to 10, depending on one of the three functions that it has completed, I'm looking for one of these things in combinations with my bias. What's that mean? Well, if I'm bullish on the day and I'm coming into the day and the last 20 to 40 macro did a manipulation, meaning we ran liquidity and we have not reversed. Well, if I'm bullish on the day and we ran sell side liquidity, that 50 to 10 macro coming into that day, that's the area I'm looking for the continuation setup to go higher. All of this is explained in detail inside of the Undisputed Trader course. But right now, this, I'm going to just let you guys know, is a little bit advanced. But long story short, what you need to know is 3 different macros that I focus on. 50 to 10, they continuation reversal. The 20 to 40 is a bit trickier because it has different functions. One, you can oftentimes see the market structure shift happen in the 20 to 40 macro. The accumulation is just choppiness. Long story short, if you're having a choppy day, if you know you're seeing sideways price actions on your higher time frames in that macro, you want to avoid. And then last but not least is the manipulation macro, which I was just explaining. A lot of times we get the liquidity sweep between the 20 to 40 area, and then we deliver in the 50 to 10 area. Something that not saying I came up with, but something that I pretty much coined. I haven't seen many people do this yet. That first 10 minutes of the market open is an exclusive macro that we focus on dealing with the first liquidity sweep in pre-market and the first FFG that's formed. But if you're gold, you should know all about that. But long story short, I'm looking to execute in these macros because they have certain functions. Okay. Now, first is time, kill zone, macros. Okay. Once we got a kill zone in a macro formulated, and of course, all of this is on the backbone of your higher time frame analysis. Nothing on the lower time frame works without the higher time frame analysis. In fact, the lower time frame delivers the higher time frame. Okay, the lower time frame is what gives is the time frame that allows you to enter on. What I'm trying to tell you is that the lower time frame is only purpose is entries. Everything else is the higher time frame. If you don't have a clear higher time frame bias, you should not be trading at all. Okay. Now going back to it, time, kill zone, macro. The second part about this is the edge. An edge is something that gives you an advantage in your trading. An edge is something that can propel and catapult you in trading, something that you can repeat and give you confidence inside of a trade. Okay. An edge is a leg up. And for me, it's liquidity. So liquidity sweep, aka raid, is a deliberate price move to trigger stop losses and basically feel the opposite direction. Sorry about that. So if I was to annotate, though, this looks new. Okay. So here, first things first, this is the low, this is the high, this is the break of structure here, right? So you're in an uptrend, right? You never broke this low, right? But you consolidated here, and then you ran that area. This whole leg down right here was manipulation. Oftentimes, you'll find that in the 20 to 40 macro. Especially if it sets up like this, I feel very confident when we get the inversion that we'll go back to that highest point, which is right there. Okay. Point I'm trying to make is liquidity. Okay. Can I delete some of this? Clean that up. Sorry about that. Liquidity. What is liquidity? Stop losses. We know that anybody got long there, that's their stops. When they rate those stops, it's a ton of buying going in the market. And then once you start to disrespect the order flow of this leg, you know you're going to go more back to, you're going to go back to that most recent high. All right. Next part about this. Wait. Sorry, they just updated PowerPoint. It's a little new to me. Now, my favorite areas for liquidity to be swept, which would be your sessions, London high, London low, Asian high, New York PM low, previous day high, previous day low. Also, everything I just said is time-based liquidity, right? So if you don't believe in time, what you're talking about London low and London high, I don't know what to tell you. But those are some of my favorite dealing ranges, highs and lows. My absolute favorite area of liquidity, relative equal highs, relative equal lows. And all of this information is covered on my YouTube in the ICT Mastery series, which is free because these are not my concepts. But my concepts also go over it inside the chat room and any obvious high and low from a big impulse move. Okay. Cover this when we get into the charts. Now, the next part about this is the inversion. All right. So going back, time, raid, inversion, liquidity. So time, kill zone, macros. That's your time. Your edge is your raid, your liquidity. So we're looking for a run of liquidity during a certain time. Already gave you an edge. We want to combine that with the actual charting setup. All right. I'm not sure what this is. And I didn't mean, so look, PowerPoint got an update, guys. And I'm trying to get rid of certain stuff. All right, whatever. I'm coming back. Sorry. Ignore my drawings. All right. So once you got a certain time, kill zone, certain macro, you get the actual liquidity sweep. How do you get in? If you run sell side liquidity, you're obviously going to go back to buy side liquidity if you're bullish on the market, right? If you're bullish on the market, don't confuse that with being bearish on the market. No run on buy side. This is what people get tripped up at. You're bearish on the market. There's no run on buy side, and you get this raid of sell side, and it just drops. Big difference there. And in another video, we'll cover that. Well, if you get something that lines up with your higher time frame model, and you get the time in the raid, your advantage is the inversion. All of this put together gives you such a strong edge. Now, an inversion gap occurs when a fair value gap, long stories, fails. Theoretically, at this chart that we're looking at to the right, and I do apologize about these arrows and things here. If we're truly bearish, when price comes back up, it should reject that fair value gap. It breaks through it. That's your first sign that we're going to reverse. And when price revisits it and retests this fair value gap, it bounces from there. If you get the bounce, that's your entry. I want you to think about support turning into resistance, resistance turning into support, supply turning into demand, demand turning into supply. Inversions. When I have an inversion like that, a disrespected version of order flow, that's also called an advanced market structure shift. Once I get that going, that's where I'm looking to get in. Now, when you get in, where are you going to target? This is very important that you need to have an obvious area that will act as a magnet for price to draw towards, right? For example, if you run buy side, sell sides is our new target. So what that looks like, if you run London's low with all this going on, or target London's high, that should be your high probability draw, and that creates a low RR. I mean, a low risk, high R opportunity here in the market. Now, what's the actual model look like? Things I want to point out to you. I'm kind of scared to draw on this chart. Eraser. Oh man, learn something new every day. Cool, cool. But all right, we'll draw. The one thing I want to point out is the time aspect. One previous slide, I said 50 to 10. The OD macro and different macros. I find that the macros I pointed out between 950 and 1030. If I am to take 500 trades, out of those 500 trades, 300 of them will come in this time area amongst different macros. For whatever reason, I find the market to set up real nice and really good unless we get a gap up or gap down between 950 and 1030. I'm looking for those exact macros in that time window. That tends to be the sweet spot. I also call that the G spot. Now, what we're looking for is price to move back into a discount array, into an internal range draw on a higher time frame. That is higher time frame analysis and also covered inside the Undisputed Trader course. But long story short, we want to be bullish on the day. Once you come into your higher time frame PD array in your particular macro, you get the inversion, and as long as you have an opposing draw of liquidity, hit the trade. This is the same model right here. This is the same model, but bearish. Again, I am newer. This is a newer version of PowerPoint. It's actually my first time using it. I actually kind of like it smoother. But yeah, premium array, premium PD array. Come into it. There's your rate of liquidity inside of a macro. There's your inversion, opposing liquidity target. Okay. So what does that look like? Let's clean up before we go to the next screen. Like a fake whiteboard here. All right. What does that look like before we go to the next screen? Here's some last trade examples. In the chat, if you're following along and you're not confused, hit me with a 333. If you got questions, or if you're confused before we get the examples and charts, hit me with a 888. 3s is I'm on board. 8 is question. Brightman had a question. Hold on. Brightman, what's your question, brother? Dan, welcome. Dan Smuck, what's up, brother? Wealth Ambassador, welcome back. Joe Cap, my mans, what's going on? I'm just waiting on Brightman in the room. This is, by the way, for the people that are watching on Twitter, this is our active mentorship. So we do like to ask and answer questions. So give us 1 second. Let him type. Come on, Brightman, type faster. Okay. What if the inversion forms outside of the macro, but you get a retest inside of a macro? Can those be A setups too? Yes, those are what I call trading around the macros. So if the inversion, as he just said, basically, let's just say it's 1045 candle gives you an inversion. And at 950, you get the actual retest. You can hit that. That's A plus, because that's the macro's function to continue or to reverse at that time in that macro. Let me know if that answers your question, brother. Appreciate you. All right, cool. Trade examples. All right, cool. It's cool to talk about it. What's it look like? This was last week. And by the way, guys, for those guys that are studying and really trying to take their trading to the next level, if you guys are to come to my Discord profile here, I'm sorry, my Twitter profile here, and come onto my Twitter profile, you will see a thread that I'm putting out. It says top 4 TRIL setups. It's usually top 5. And the trades that I took this week will be here. Sometimes I have live videos. The long story short, that's there to reinforce your learning. All right. So let's go ahead and point out some stuff for you. All right. So higher time frame PD array, right? 1 hour order block. Here's your liquidity. Here's your sweep of liquidity into the higher time frame PD array. At what time is this? 950. So 950 10-10. That's your macro. You swept liquidity. Here's your opposing liquidity. Here was just a key area from the higher time frame that I targeted, but all targets delivered. This one trade alone was almost 100 handles. Let me just rephrase that to you. I didn't have many contracts on here. Like it's not like I was heavy. All you really need in a week is 2 or 3 of these type of TRIL setups. You're golden. Whatever challenge you got, you're good. And if you want to make a lot more money, once you get confident with this, start adding size to these trades. But that's for another video down the road. Okay. Now, let's clean this up. Wait. Maybe I won't draw on these no more because that's going to slow us down so much, right? And if you guys hear noise, I do apologize. My whole family's home. It's the holidays. They're going to be here till January. All right. So another setup. And by the way, all these trades were called live stream real time. Here's your liquidity, 20 to 40. 20 to 40 macro does what? Market structure shift is one of the main functions. There's your breaker structure, right? Now, peep this. Breaker was formed in the macro. You actually got the test right there. You could have got it, but you also could have got in here if on the retest. Once you get in on the retest, posing liquidity right there, trigger the target. Bam, done. All right. Let's clean that up. Let's look at another one. This one is beautiful. This one was super pretty. This one was like, you have a high school crush. This one was like, wow. All right. Clean liquidity, swept it into a PD array. Opposing liquidity here, inverts in the 50 to 10 macro. Now, I want you to peep this. Are y'all ready? Ready to listen to this? These lows, this right here is accumulation. That happened in the 20 to 40 macro. On the 50 to 10 macro, we yanked that low and then had a reversal. The 50 to 10 macro is reversal and continuation. So when you see this type of profile happening, these are like my favorite moves. Like when I see this happen, I am very confident that we're going to go to target. Okay. So that's one setup. Got to use trade examples. Hold on. Clean it up. Clean it up. All right. Let's go to the next one. Now, one thing I want to say is, doesn't this trade, look at this trade. Y'all looking at it? Look at this trade. Look at this trade again. And look at this trade. One last time. Same macro too. Look at this trade. It's the same macro too. Look at this trade and look at this trade. If these trades look the same, hit me with a 888. If they look different, hit me with a 777. These are different trades, way different times, way different days, different months. But the trade in the framework is exactly the same. And that's why I give confidence in trading this, because for me, I'm trying to treat my trading like a business. If you work at a day job or if you work at a business, a lot of times the things that you do on a daily basis are very similar on day 1 to day 2. That's because whatever you're doing and the way that you're doing it is making the business or making you money in some way, shape, or form. As traders, the best thing that we can do is have one model that looks the same, that we can repeat over and over again. Because if that doesn't happen, I can stay out of the market. Because don't forget, it's the market's job to trick, trap, and fool you. And that's why I like to say I can give you this model. I can give most people this model. Most people will still struggle because they don't have the discipline that's needed to win in this. And it's not until you pay that market tuition do you gain that discipline to do this. Now, again, covering this, 20 to 40 macro did what? Accumulate. 50 macro ran that low. Inversion, opposing liquidity. Okay? It sounds simple till we get to it, right? Till we get into it. Now, one last time. Here it is, all done up and pretty. Let's get the mouse. You got the macro. Here's the raid here. There's your inversion. We had a higher time frame draw of liquidity. This was the 1 hour draw. Point of what I'm trying to make is that framework is fire. If you use that framework You will take losses. There's no way around it. You will take losses, but if you use that framework, you could trade like this. This was live trade that we called out. A couple things I want to point out. To the left, there's your weight of liquidity. Here's your inversion. There's your entry, target, opposing liquidity. No drawdown on the trade. Order flow is bullish. Now, one tip I want to give you when you start trading, if you guys can look and see, like you get the inversion gap, like right there. Hold on, that was me looking for higher time frame targets. But yeah, once you get the advanced market structure shift, there's the 50 to 10 macro on the entry. But once you get that, you see how this fair value gap comes in. Price comes into the fair value gap, then bounces out of it. There's an inversion fair value gap, retests that, bounces out of it. Here's an order block, comes back into the order block, bounces out of it. Another order block, dips into the order block, bounces out of it. That's called order flow. When you have a clear draw of liquidity and you start looking at this order flow continuously coming in, I'm confident, bro. There are times where I would even add to each one of these order flow pivots. If you combine that with market structure, once you get in and get a trade running, once you get the trade running and have market structure, start dragging these stops to the bottom of the most recent lows. Clean trading. Long story short, this trade goes to target, right? Point of matter is framework is what's going to keep you in this game, okay? And last but not least, we got free access Friday. We're going to break down Friday's trade. We're going to break down why I took what I took. We're going to take it step by step, but I just want to say this. Stop sleeping on free access. Every Friday, I'm live. You can come trade with me. Everybody that's listening to me right now, this Friday, I'm trading. You can come in, watch me trade, see my screen. I'll punch the button in front of you. I'll tell you when to buy, tell you when to sell. Nobody does it like how we do it. For free on Fridays. Got a free community that you can talk to other people that are learning this model, that are trading in this model. People who have taken payouts in this model. Other funded traders who traded this model. And I know I spelled breakdown wrong. I was typing typo. All right. So let's go ahead and get into charts. All right. Let's go ahead and get a replay mode. All right. Because, Twitter is undisputed, right? And because Twitter is undisputed, I'm not going to make any claims that I took the trades. But if you guys were there Friday, if you know, you know. All right. That's all I got to say. All right. So get into this coming in Friday. This low, that high, that's your dealing range. Here's the premium. That low got swept inside of the highest time frame discount array, which was the inversion. Internal draw, looking for price to go to external. Right. That's how I framed it. Okay. Everybody's looking for the short. Everybody and their mama's been looking for the short. Since we swept this low, I've been bullish. And I'm going to stay bullish until when our time frame shift structure back to the low side. When this gives me a good market structure shift back to the low side, I'm going to go ahead and be extremely bearish. Now, somebody's going to say, well, X, right there, you should have been bearish technically if you're looking for the market structure shift. Yes, but we had a range coming into that day. From this high to that low, you got a range. And price is sweeping at the equilibrium of that range. So for me, I'm looking for price to come to that high. See what happens. Price, in my opinion, is definitely going to come into that high. All right. So higher time frame context is bullish. This, we're sweeping at the equilibrium of its current range. I'm going to be looking higher. Going down to a 15-minute chart. All right. Coming out of this PD array on the 15, you're inside the middle of the range. The important thing to note, when you turn on, again, if you watch the last parts of the video, what are my favorite areas of liquidity to be swept? Here's Asia's low being swept. So that's going to leave you these relative equal highs. Again, my absolute favorite, relative equal highs at London high. You mean to tell me London high and relative equal highs are the same? Yes, all day. I'm going for that, right? And on top of that, the top of the range of the Asia range is right here, right? So for me, I am slightly bullish coming into the smaller profiles, looking for price to go higher. I'm going to just delete this because we're about to go on a 1-minute chart, okay? Going down to a 1-minute chart. Let's turn off the ICT kill zones. And yes, you can execute from the 1-minute chart. But since I've been talking about Friday's price action, this is the first time you saw me look at the 1-minute chart. So the 1-minute chart is for what? Execution time frame only. All right. So looking at this, this is kind of relative equal for me. So this is going to be sell side that I can see macros take right now. Let's label everything right. This is going to be sell side. And for me, this is going to be an area of buy side. All right. Follow me right now. Now, macros, here's how you use them. I told you about the opening drive macro. So that's 930. Here's 940. Right. Other macro that I like to use a lot, 950. And this is going to be my 1010. Right. This is my 1010 macro. All right. So here comes the Friday's price day. I got a range. Got some new lows in the building. Let's see what happens. I prefer to see price yank this range in reverse. That's what I prefer to see. So let's see what we get. That's your opening candle. That's a tag. And you see how it closed. Here's it. About to give out some gems. When you see relative equal lows or just a collection of lows or some area on the chart where you're like, yep, that's sell side liquidity. Or yep, that's buy side liquidity. And price yanks below it and wicks like that, I am a happy camper. I am excited on the chart. So when I saw that, what do you see here on the chart? You got this gap and this gap. Here's another gem. When you have two fair value gaps on top of each other, two or more on top of each other, meaning this gap and the next candle's a gap, when you draw that, you want to combine both. Combine them both. Okay? Currently, right now, this is a bearish FFG, right? This is my first possible inversion, all right? So right now I'm looking up. Let's see what price does. So price gets into it, goes lower. X, I thought you was bullish. You said the wicks. Let's see what price does. Gets through it. Price is above it. Not only is price above it, I know this isn't theoretically the cleanest BPR ever, presenting this BPR, right? Before I say anything about that, what happened here? Price closed above the gap. That turns that into an inversion gap. There's your inversion fair value gap, right? You got the inversion. You got the bullish gap right below it. So I'm looking at this and saying to myself, bro, it's only 937. Got a liquidity sweep inside the opening drive macro. You already ran Asia's high, Asia's low. You got relative equal highs, very clean here. And you got Asia highs, somewhat relative equal there. And you got all this bullish price action happening right now. Any retest of that box, especially if we can get in that green box, I'm getting hand. I'm going long. And right there, I got long. Bam, bought trade right there. Okay. So for me, I'm long here. And I'm placing my stop at the bottom of the box. And where am I going to target? Asia's high. Look at that RR. Now, X, that's a bigger loss. It's not 10 points. Okay. Well, if you're looking at a trade like this that has so much R, why would you put so much size on? Size down. Most of y'all that are watching this right now, the reason why a lot of y'all aren't finding profitability is because you're too early in your trading career, trading with too much size. Size down. At any given time, you can add more contracts to your positions when you feel more confident. For me, anytime I'm looking at a trade that's massive RR, if I'm hitting it with size, as soon as we get to target one, I'm cutting most of it off. If not, I'm going to take half my normal size and then trade it like that, because if I'm shooting for RR, I know I could take a bigger loss like in this situation. So what does price do? Bang. Bang. Hits target one. Target one got hit. This is make sure you want to scale out. Comes back down. I want to see what happens here. Right here is a bearish fair value gap. I'm just going to go ahead and mark it off as an inversion gap. See if price gets above it. Price gets above it. Inversion gap. If you got stopped out from that pullback, if this happens, you can get right back in right here. Let's see where we go. Target 2, scale more out. Target 3. You're done for the day. Done. One trade done. Bam. No scalping. No 90 executions. Boom. You came in, you cleaned up, done. On to the next. The secret is having the discipline to rate because the market's not going to give you this every day, but it is going to give it to you consistently. So if you can find a way to develop the mindset to sit here and wait for this to happen and then walk away on the days with things aren't happening, you become a monster. Now, this was a slow Friday. Imagine what we're going to do next week. All right. So I hope this has helped. Before we start to head out, and we're going to go into framing next week's trades. We're going to do this privately in our community. We're going to start to frame and plan our next week's weekly forecast, and I'm going to answer a lot of other questions here. Does anybody publicly here have any questions right now? If you're all good, hit me with a 777. My community's pretty strong on these concepts. I'm not expecting them to ask me too much. If you have any questions, hit me with a 333. In the chat room, if you're all good, hit me with a 777. Rono, everybody hit me with 777. Uh-oh, Bright Man, you got another question. What's up, Texas girl? Bright Man, what's your question? Now, I don't gave you the framework to win. Everybody that's watching it, the 370 people that's watching over there on Twitter, I literally just gave you some solid framework. I want to see some good results next week from you guys. Super excited. Hey, we're excited to have you. Bright Man, okay. As long as the PD wave is formed in a macro or a retest occurs in the macro, it can be A plus. Yes, it can be A plus. Yep. So did this happen? Let's see when this happened. This gap theoretically did not get formed in the macro, 928, 929. Technically, it got formed in the previous macro, the 20 to 40. Yes, there's a 920 and a 940 macro. I don't trade those macros, but again, that macro got formed in our delivery macro, which is the 30 to 40. You combine that with the fact that we were looking for London highs and Asia highs because we rated Asia's lows. We're looking at a reversal potential. All that together, plus this execution, A plus. And you got the questions you guys got? When you got any Bright Man, you got another question, or you all good? All right, guys. So if you're in the Zoom room, sit tight. We're gonna go ahead and tell Twitter, go have a good time. Twitter, y'all have a good time. We want to see some good results from you. If not, I'll see you guys on live stream. Everybody here, we're going to frame next week's trade. This has been a phenomenal stream. I hope this has helped. If this has helped, let me know. If you're on Twitter, hit my DMs. Let me know if this has helped you. And if not, let me know still, and we'll adjust accordingly. So let me turn off the recording.